Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the outlook for the final day of 2015. Looking back at a few facts from the past year. Keep in mind, from a grain perspective, record bean and wheat crop in the world in 2015. Interestingly enough, that's following a record corn, bean, and wheat crop in 2014. So obviously world supplies as we speak are fairly plentiful as we move forward. We also saw a big supply increase in the proteins this year, in the meats, pork, poultry, beef, and many in that industry are expecting another increase in 2016 because of cheaper input prices. And looking at crush numbers in cattle and hogs right now, especially cattle, that seems to be prevalent. Obviously the poultry side is more flexible as we move forward, but bottom line, looking for expansion there as we move into the early part of 2016. Then the debate will rise on acres here in the U.S. as far as corn, beans, wheat, etc. Most in the trade right now are expecting a slight increase in corn acres, slight decrease in bean acres. We'll see as we move forward. And keep in mind also as we move along, potential large production out of South America, but weather will be a key ingredient going forward. Now, looking at from a commodity standpoint, some of the returns in 2015 from a percentage standpoint, all these are negatives. Corn down about 9%, which was one of the better performing commodities in 2015. Beans down around 14-15%, wheat down 19% in the meats, hogs down 27%, cattle down 21%. In the energies, crude oil down about 31-32%, natural gas down 23%, metals, gold down a little over 10%. Stock market about unchanged on the year, and then lastly, as a comparative standpoint, because of the reverse correlation, U.S. dollar index up nearly 9% in 2014. Keep in mind, if you look at the Deutsche Bank Commodity Index Fund, it's down as a combination of all commodities, approximately 23% for 2015. That's following 2014, where there was a drop of 28%. So the commodities as a whole, probably led by the energy complex over the last couple of years, has had a tough run. We've seen less investment money, hedge fund type money, etc., in these markets the last couple of years because of those returns. So that'll be interesting as we move forward into the latter half of this decade. Shorter term things to watch as far as the grain markets are concerned. Heavy rains and some just oddball rains for this time of year has caused tremendous logistical problems, say in the St. Louis, Illinois River area, so it's kind of put a hold on barge traffic here for another week or two. Once things alleviate themselves, should get back to normal. Keep in mind we have a pretty good sized bean program on yet at this point from an export point of view, so that'll be key going forward as we get into January. The January crop report is only 7 trading days away. January 12th, which is a Tuesday, the conversation will start going into that as far as final production numbers, supply and demand updates, and also quarterly stocks. But as a whole, that, along with South American weather, are the key things, at least in the short term, going forward into the early part of 2016. And as you sit here right now, 2016 goes in with quite a few limitations. Now, also in a year where corn has had the smallest trading range, a little less than $1 trading range for the entire year. That's the smallest trading range in 10 years. The trading range in beans was a little over $2. That's the smallest trading range in beans in 9 years. Now keep in mind, in both those examples, that goes back prior to when we made this new move into the markets in the 2006-2007 time frame. Going forward into 2016, just some topics to keep in mind. One will be watching the dollar index, watching how the macros affect that. Obviously, the stronger dollar is having some impact on exports, both in the grains and the livestock and other commodities and products the U.S. moves. Cost of production going forward is going to be key, and how that may or may not affect acreage as we move forward. And also, it's an election year, so that can always change things. And last but not least, any type of supply disruptions or changes would be obviously a point to create some change in the market, in a market that's been very, very quiet as far as movement. When you look at, especially in the corn, look at option premium and so on, there's not much there. So with that, we wish everyone a Happy New Year, a prosperous 2016, and those of you that are customers, we thank you for your business in 2015 and look forward to working with you in 2016.